Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again in the gold market. So this weekend we have taken a look at the recent economic and political events. So this is negotiations with China, the Trump tour over the Middle East, what the results have been achieved, and how it relates to the global situation, domestic economy situation in the United States, and in what position in general Donald Trump stands right now. And everything is generally is coming down a bit, some release in the market is coming, and what's actually have been achieved and what perspective gold has with on the background of these moments that we've got. So we have taken a look at it because actually results of the Donald Trump tariffs policy, it always seems that it has no relation to the gold market and in general to the economy, but in fact it has direct relation to the budget income. Correspondingly, it has direct relation to the budget deficit, demand for the debt, interest rates, and so on. So the fruits of this policy within the 2 or 3 months will appear in the statistics that we are tracking month by month. And we should know in advance what we should be prepared to. So, and the things that we have estimated and discussed in the report makes us to be really exciting about the perspective of the gold market in the long term. So close to the end of the year might be our establishing of the big trend on the gold. And actually, we think that this pause is temporal and could last for maybe during the summer. By the few reasons. Actually, these reasons were mentioned yesterday as well. So this is mostly because this vacation time, and seasonally gold is mostly stands quiet within the summer. Second is the 90 days of the Donald Trump reciprocal tariffs postponing. Within the 90 days, hardly business will take any active steps. So, but within this period, we will get more and more statistics on the United States economy. And it is widely suggested, and we think so, that probably it's start becoming worse and worse. So, and the tension inside of the United States economy system will rise. But all this stuff is a bit long term. So, if you're interested, you will read report as usual. Speaking about the short term and what we intend to do in the next week. So, as we said in the beginning of the past week, or actually this week, so we are not considering any shorts. We said that once this target has been reached, here on a 4-hour time frame chart, market has completed this big ABCD, and actually butterfly here has been completed. This target has been reached. We said no more shorts, and this strategy will continue on next week, because not only because the overall picture remains the same, but this week we also have got the big special pattern. This is the grabber on the weekly chart, and this grabber suggests that market should return back at least to the 34.30 top right here. I'm not speaking about retesting 35, but at least return back to this moment. How fast it will happen, nobody knows. Maybe it will take 2-3 weeks, maybe longer, but until market stands above these lows, 31.20, it keeps this strategy valid. In fact, on the weekly chart, if you take a look and read the analysis, you will see some multiple bullish patterns exist that suggest upward bounce. And now our advantage stands so that we're still in the initial stage of this response. So you can see market hasn't shown yet any acceleration. Even more on Friday, you could see a bit volatile performance with the deep retracement. So everything that we discussed here and searching for a chance to go long. So long-term traders, not occasionally, we tell that if you trade on the daily weekly chart, think about using the daily big garters to put to buy for taking the long position. If you did this, you now should feel relatively comfortable with the position that you have. But if you trade on a higher time frames, your stop better to keep for now below 38 area. just because this is the bigger scale. For those who trade on the daily intraday charts, there are some options exist. Now we discuss it. So by taking an hourly chart, you could see that in general the shape of the hand shoulders that we discussed survived. So although we thought about shorter retracement here, we speak about A, B, C, D pattern, but we said that this will be the final checks or final outpost for this pattern, final vital area. Market has to hold price above it. If it will drop, probably we will see the retesting of these lows. Now we have a bit more nuances about this situation. Why? Because now this is the lows of the grabber, and we do not want to see that it will be broken. In this case, the short-term stop based on this grabber will be destroyed. We do not want this. Second, if we're dealing directly with this kind of the hand shoulders pattern, we also do not want to see the break of the 31.70 lows, or better to say 31.55. Lows have been formed. So for the hand shoulders pattern, since it now is becoming naturally the pattern that should trigger this upward action, right, on the hourly chart, we also do not want to see that it will fail. So correspondingly, those of you who do not have long positions but you would like to take it, you have an option where to place initial stop. You could either cut your trading lot and placing stop below the 31.20, or you could use larger trading lot but place the stop below 31.50. Both scenarios have its own advantages and disadvantages, and you probably clearly understand what they are. So this question is up to you. You will probably should think about it, make the final decision, because it does make impact on overall strategy and the patterns that we have. So until this scenario is valid, until we have the Polish patterns, we are not considering any bearish positions. So if situation will change somehow, gold will collapse, in this case probably yes, we will need to do something else. But for now, for the beginning of next week, we intend to keep going with the patterns that already stands in place. So that's our view currently. See you next time.